In April, gold prices saw an unusual rally in the market surging to historic highs. Let's have a look at why gold is shining so brightly. The international price of gold is soaring. An ounce of gold now costs around $2,300 after hitting a peak of just above $2,400 in mid-April. That's 12% up since the start of the year. 1 kilogram bar of gold a year ago was worth about $64,000. Today, it's worth $76,000. But what's driving up the price of gold? Well, when there are economic challenges and geopolitical tensions, investors want to go to those safe haven products. So gold prices is a reaction and a reflection of the level of uncertainty that we're seeing in the world today. Central banks have bought up over 1,000 tons of precious metal in the past 2 years. According to the World Gold Council, this demand is due to the gold's performance during times of crisis and long-term store value. Market watchers are bullish on gold and expect it to continue to shine in 2024. Gold used to attract an older crowd as an investment tool, but these days gold shops regularly serve customers in their 20s to make the most of what little savings they might have. Most young people can't afford to buy gold by the bar, so they're buying it by the bean instead. Weighing about a gram, the beans can be picked up for about $80 from banks or gold shops, safeguarding Gen Z's savings from melting away. Let's get more on this with Bas Kuzman. He is the DHF Capital CEO and asset manager and joins us live now from Vilnius in Lithuania. Thank you so much for being with us on the program. So just explain to us a bit about the factors that have contributed to the recent surge in gold prices, particularly reaching historic highs in April.
Yeah, thank you so much for having me. The gold prices has been way more interesting over this year than in the past year. So we've seen a lot of volatility. So basically, there's a couple of reasons. Of course, we have the geopolitical tensions in the world that made gold rise last year and this year. But we also see an approval of the Bitcoin ETF. And about the same time as that, this Bitcoin ETF got approved and started rising interest, we also saw that a lot of people flocking to gold as a hedge. So a safe haven versus a more risky investment combined.
Talk to us a bit about that. Expand on that for us a bit. How significant is the role of economic challenges and geopolitical tensions in driving investors towards gold as a safe haven asset?
Gold always been seen as a safe haven. So basically, when any tension comes up or any potential currency value of the US dollar, of the euro, or any other currency potentially decreases, the increased amount of gold in value and also in demand. And as gold has a limited supply, due to its limited demand, the price will skyrocket at the moment multiple people want to get in.
And how does this reflect on the metal's performance during times of crises?
So that mostly makes the price go up. We also seen that a lot of people have been seen more interested in this safe haven investment. It got a lot of popularity, and therefore, indeed, younger people, but also seasoned investors and banks have been restocking up on physical gold. We also seen a lot of higher volume in trading gold on the ETF market, where mostly in April we actually saw a very big surge in gold due to high volume on the exchanges in Asia, which probably have, again, more to do with the same rush on the cryptocurrency at the same time.
Right, and as I mentioned earlier, a lot of young people have started to purchase gold, and now with this demographic increasingly investing in gold, particularly through smaller units like gold beans, how might this trend impact the future trajectory of gold prices in the market overall?
So small quantity probably don't really make the price grow. What I really like is that this younger generation starts to look into investments for themselves. They may have more ways of making money, especially with the search of online opportunities to make money. And we actually see that more and more of them get really interested in investments, where gold, in our opinion, maybe should be about 5% of your net worth. So if you're starting to make some good money and you start to have some savings, investing in gold for partially your funds is a very good idea.
All right, Bas Kujman, thank you so much for being with us here on TR2 World. I appreciate it.
Thank you for having me.